Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because even though there's a ton of uncertainty out there right now, Bitcoin is exactly where you'd expect it to be at this stage of the cycle. Now that we're getting deeper into 2025, it's no surprise that Bitcoin is a bit expensive at current prices, but we're not extremely overheated quite yet. And I do expect that Bitcoin still has higher to go, but I wouldn't consider these current prices a discount either because we are quite extended from that 200-week moving average that Bitcoin loves to return to during bear markets. It's great to see the recovery we've been seeing in market sentiment based on the fear and greed index now getting closer and closer to the greed region when just 2 weeks ago everybody was fearful thinking the cycle was officially over. And you can't have a newfound optimism in market sentiment without new price targets as well. This one here is calling for Bitcoin to hit 160K in October, just 1 month away based on a MACD golden cross. And even though we saw quite a nice rally of 40% last time we saw this golden cross, when you account for diminishing returns, maybe this one will end up giving us about 20 or 30%. And if we apply that to current price, that would put Bitcoin at about 140 or maybe just under 150K by end of year, which I think is very reasonable. But rationality gets completely thrown out the window when we start talking about some of these other price targets like Bitcoin Bollinger Bands pointing to an explosion to 300K Bitcoin. And as you can see here, it's using a fan favorite, the cup and handle pattern, and saying that it's pointing to 300K Bitcoin. But as we've mentioned previously on this channel, you can't use the cup and handle pattern on logarithmic charts because you end up seeing these huge price jumps. But in case a cup and handle pattern pointing to 300K Bitcoin wasn't enough, we also have Bitcoin's super cycle ignition hinting at 360K per Bitcoin. And what do you know, we have another fan favorite, the first chart pattern that every single investor and or trader learns, the inverse head and shoulders. It was the first one I learned as well, and I started looking for it absolutely everywhere. But according to this analysis, we had a macro head and shoulders pattern, and now we have a micro head and shoulders pattern after it, which should take Bitcoin to 360K apparently. And the reason I'm not a huge fan of this chart pattern is that they're drawn very arbitrarily. For example, here the shoulder is the same in terms of the resistance level, but here we have one side of the shoulder quite a bit above the other. And if you look at the mini head and shoulders pattern here, you can see that these lines are being drawn very arbitrarily. So I have a very hard time relying on these chart patterns and price targets. So I like to look at something a bit more objective, like a very clear chart pattern that Bitcoin loves to do, known as the false breakdown. Also my favorite price action for Bitcoin in terms of bullish continuation, because there is no better sign that an asset is stronger than the bears currently think than seeing it fall below support and then quickly reclaim that level. That's a great sign of strength that is very hard to argue with, the same way that a false breakout is a very strong sign of weakness that is hard to argue with, that usually leads to corrections. Because if an asset was strong, it should be able to break out without immediately getting rejected back into its own range. And if an asset was weak, like Bitcoin was recently, it should not have been able to reclaim that range breakdown level of 112K. And based on that price action, I am very happy with my current positioning. I've taken a bit of risk off the table because we are deep into the cycle, but I still have plenty of upside exposure in assets that I do believe have higher to go. And as always, if you'd like to learn about my portfolio automation system or mental models I use to navigate this market, or common mistakes I see so many investors making, especially as we get to these later stages of the cycle, you can check out the Crypto Enjoyers program and community in the video description. But for now, it's great to see that Bitcoin was able to hold our major support level combined with that 20-week moving average. And my bias as of right now is to expect higher prices until that changes. And this is why Monday's free weekly report was called Signs of Life. We ended up seeing that nice bounce off support while everybody was being very pessimistic. And now we're seeing a bit of inflows coming back to the ETFs as the crypto market cap crosses $4 trillion once again, which is an insane number to say out loud. You can see the ETF inflows are starting to trickle back in for Bitcoin here, probably because of all the excitement surrounding the upcoming rate cut. And we're getting very close to finding out whether we're going to be seeing a final push into September and maybe even October, or if we're going to end up seeing a full reset because the Fed surprises the market by being more hawkish than we currently anticipate in next week's FOMC meeting. Now, I'm still leaning towards the final push because right now the market is very optimistic and is likely going to continue rallying in the short term, no matter what the Fed says. But what happens in the medium term is going to depend if the Fed ends up being as accommodative as the market is currently pricing in. It's nice to see September being green, similar to 2024 and 2023. But even though the month is far from over, I'm sure a lot of investors are expecting a green October and November. But as I've been saying recently, I don't think historic seasonality is going to matter much for the remainder of 2025 because we are at a major pivot point in the Fed's monetary policy. So I do expect those decisions to have a much bigger impact on markets than seasonality. And speaking of monetary policy, we do have the global liquidity index getting very close to making new highs. And I've been getting a lot of questions on this brief pullback we got on the global liquidity index and whether that means the market is also going to correct during that exact same time frame. That kind of misses the point of this indicator. This isn't some magic signal which is going to tell us the exact day Bitcoin is going to top and the exact day Bitcoin is going to bottom. I don't plan to sell my entire portfolio on September 15th just to try and buy back the entire portfolio on October 15th because the global liquidity index said so. It just provides us a very nice trend to have a general idea of when we should be optimistic or concerned about what Bitcoin is doing. It helped us take some profits in March of 2024 and buy the dip and stay optimistic in September of 2024. It helped us lock in profits in January of 2025 and December of 2024 because of the downtrend. And it kept us in the game and kept us bullish during April of this year when everybody was panicking that it was all over and the global economy was about to collapse because of tariffs. And what do you know? Bitcoin ended up recovering. Of course, this isn't the only driver of markets, but because Bitcoin's main use case is as a currency debasement hedge, it makes sense that what's happening globally with liquidity and currencies would have a general macro impact on what Bitcoin and other risk assets are doing. So we'll see what happens. For now, the US dollar index continues to look weak, which is good for global liquidity and good for risk assets like Bitcoin. But a lot of the dollar's price action is going to depend on what the Fed tells us in next week's FOMC meeting. The market is almost completely convinced we're going to get a 25 basis point cut. And it's going to be interesting to hear Powell's comments on the recent labor market weakness with the unemployment rate breaking above 4.2%. or the recent spike we've seen in initial jobless claims recently. Now, one spike doesn't mean it's the end of the world, but if this does end up picking up steam and gaining some momentum, that would be very bad for the economy and markets. So it's going to be interesting to see what Powell says about it because inflation is very stubborn at 3%, and they will likely have to destroy the economy to bring it down to their 2% target, which I don't believe they have the will to do whatsoever, especially with the pressure coming from the administration. So we're likely going to see the Fed enter a rate cutting cycle with inflation at 3%, real GDP growth also at 3%, which is GDP minus inflation, and with the stock market at an all-time high, and with Bitcoin trading at an all-time high or nearly an all-time high as well. And speaking of trading very near a previous all-time high, Ethereum put in a decent bounce this week, but it is still a lower high and rejection at 4,800. We'll see what continuation looks like next week, but I do believe Ethereum could still spend some more time cooling off. We've seen a big slowdown in ETF inflows, but at least we're not seeing any huge outflows anymore. Ethereum corporate treasuries are still buying up Ethereum, but the purchases are getting smaller and smaller, with Bitmain buying 200 million this week, and we can see this beginning to flatline in terms of this treasury buying. Similar to what happened with Bitcoin, it is much easier to move the price with purchases when the price of the asset and the market cap is lower. But as the Ethereum market cap, similar to the Bitcoin market cap, gets larger and larger, it takes more and more incremental dollars to actually move it. And we're starting to see that play out here. But there still seems to be a ton of excitement surrounding Ethereum, with the CME futures open interest still very near all-time highs. Perhaps some of these are short positions that are hedging Ethereum ETF holdings and just bringing in the premium. But I would be very careful expecting something like a $12,000 Ethereum $16,000 Ethereum or a 20K Ethereum anytime soon, because we're already starting to see that rotation of narrative into some of the smaller altcoins, which have smaller market caps and means they also have more upside potential if they start to get some corporate treasuries and ETFs of their own. So for now, it's no surprise that Ethereum is cooling off here at our major pivot level. Is it going to break above it immediately? It is very hard to know, but I do believe Ethereum Bitcoin still has higher to go. It's been nice locking in some Ethereum gains on the way up so that I can see this trade all the way through, but it might take some time for Ethereum to actually break above that major pivot level on its Bitcoin pair because of that slowdown we've been seeing in ETF inflows and in corporate treasury purchases. But some of our main narratives for this asset class are still fully underway, with stablecoin supply hitting $300 billion on CoinMarketCap. We also have real world assets hitting $29 billion, which may seem small, but even a year ago, this was well under $10 billion and has been growing very, very rapidly recently. And we are seeing early signs of a mini alt season. The alt season index just looks at what percentage of the top 50 coins are outperforming Bitcoin on a 3-month rolling basis. And as of right now, we're seeing a signature very similar to the mini alt season we saw in November of 2024 and the mini alt season we saw in March of 2025. Very hard to know exactly how long this is going to carry on for, but what I am watching is the ETF deadlines coming in about mid-October, because they just got delayed by the SEC recently, and the final deadline for some assets like Solana and XRP are coming at around October 12th or 15th, and I would not be surprised if we kept up some excitement and momentum going into those launches as maybe a sell the news event. But as of right now, it does seem like altcoins are outperforming Bitcoin by quite a bit on a 90-day rolling basis, but it will likely end up being underwhelming compared to the alt season we saw in 2021, the same way the alt season in 2021 was underwhelming compared to 2017, because there are more and more assets today, and these assets have larger and larger market caps, which means it is very hard to see the multiples we saw previously, and it's important to keep that in mind in terms of your price targets and what type of goals you have this cycle for your altcoins. And speaking of goals for our altcoins, Solana continues to grind its way higher towards our target at 260. When it first got rejected at its range high, we looked for a bounce off the range mid, and that's where it bottomed. Then once we broke above the range high, we started targeting the 2022 high, and it seems to be working its way there quite nicely. We're seeing a lot of excitement and open interest starting to build on Solana with the recent corporate treasuries for Solana and the upcoming Solana ETF. You can see the huge spike in open interest we've seen recently as investors try to front run those corporate treasury purchases and the launch of that Solana ETF. And we are starting to see very solid price action for Solana Bitcoin here, getting ready to close above its previous range low, confirming this as a major false breakdown where so many people started capitulating, expecting it to follow the path of Ethereum Bitcoin. A close above this range low would make me target the range mid as our next target for Solana against its Bitcoin pair, meaning we would expect some continued outperformance from Solana over the next month or two. And speaking of outperformance, it is catching up to Ethereum and Bitcoin very quickly on a yearly rolling basis, and we're getting very close to Ethereum outperforming Bitcoin on this past year and Solana outperforming both of them on this past year as well, which is what I would love to see before this cycle ends. But of course, a lot of that is going to depend on Bitcoin maintaining structure and slowly grinding higher here and not falling back below that 112K level and losing that bullish range reclaim that we are putting in right now. But as we look forward, the federal government is still running huge deficits, and that trend seems to be worsening year after year. Exponential debt growth means exponential money supply growth, and as that fiat currency gets debased, it puts upward pressure on our risk assets like the S&P 500 and our fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.